You are listening to the Mark Guzman Podcast Experience. Duane Vizinau is a mortgage operations manager at Travis Credit Union. He and Ronald Garcia join me in this episode to discuss the difference between credit unions and traditional banks, why getting rid of the mortgage interest deduction might not be such a bad thing, flood insurance as it ties to Hurricane Harvey, some tips on increasing your credit score, and the current administration's announcement to destroy DACA, the Deferred Action for Childhood Arrivals. This is not an episode you want to miss. So, how do we pronounce your last name?
Vizinau.
Vizinau. Okay, so we have perfect. Duane Vizinau with Travis Credit Union. Now, you're the mortgage operations manager there, correct?
Yes, I am. Yes, I am.
Okay. And which one do you work out of?
I'm out of the corporate office in Vacaville.
Okay.
And I pretty much manage all of the real estate loans that come from all of our 23 branches.
Okay. And then with us, we have Ronald Garcia with Security Pacific. Welcome back to another Real Realtors episode. You're actually going to be on like the first 2 or 3 episodes.
Thanks for having me again.
And thank you for having me as well.
Yeah, thank you for coming in. And unfortunately, we were planning to have another 1 or 2 of your loan officers come in, and they had to cancel.
Yeah, unfortunately, it was 2 branch managers. Our manager of our Richmond and Vallejo branches, unfortunately, with time restraints and whatnot, they weren't able to make it.
Okay, so we'll have to do another episode where we can get them in here.
Yes.
Yeah, so why don't we jump right into this? And so today I want to talk a little bit about Travis Credit Union, your loans, programs, various features, and then get into some advice for people and some current topics. Now, Travis Credit Union's been around for how long? How did this get started? And what's the difference between a credit union and a normal bank?
I believe Travis Credit Union has been around since 1958. And pretty much it's a community-driven lender who offers programs, different types of events and seminars to help within the communities that we serve. The biggest difference, for one, is we are not FDIC. We're a National Credit Union Association, so our funds, when a member invests funds with us, those funds go back to them, so we don't reinvest your funds into a market where you can lose your funds or whatnot. So with that, anytime that a member does a loan with us, we take those funds to offer better products and services as well as rates back to the members.
Okay. And then you guys are all over the Bay Area. Now, are you guys nationwide?
No, we are not nationwide. We're pretty much in 9 counties, and the closest being Contra Costa right here.
Okay. Now, so credit unions are really for the members, by the members, basically.
Exactly.
Okay.
Exactly.
And then because of that, you don't have to go through the normal bank requirements like getting FDIC insurance?
There is no FDIC insurance, exactly, but there is still an association that you're a part of that's pretty much backs you just like FDIC, but it's just not federal.
Okay, perfect. Now, you've been in the mortgage industry for a really long time.
1999.
Okay, and you did underwriting for how many years?
I'd say I've been an underwriter the majority of that time. I'd say maybe like 10, 11 years, something like that.
Okay.
Yes.
What got you into the business?
Actually, my mother was a broker. She had her own
a real estate broker or mortgage broker?
Real estate broker in San Leandro. And I guess she didn't want her son sitting on his butt, so she said, here's the job. So I started out copying files for a .com company, and here I am. So I've been in the industry since 98, 99, and worn plenty hats and made it to operations manager.
Okay, and you worked with companies like B of A and some other big companies, correct?
I did work at Bank of America. At that time, I was in our home retention, working on foreclosure, short sales, deed and lose, either trying to assist borrowers to keep their home or, unfortunately, trying to sell the home.
So how intense was that of a job? Because from 2007 to 11, I sold foreclosures. So I was on the real estate side.
Yes.
So that was pretty intense.
Oh.
And dealing with asset managers and various banks, short sales. I mean, how was it on your side?
I wouldn't recommend that position for anyone. To be honest, because it's not something that you look forward to, trying to get someone out of their home that they've lived in for their whole life. And unfortunately, not all bank institutions treat borrowers the same. Some banks will let someone sit in the home for a long time and help them modify their home. Some banks are, out. They're not going to assist you at all. So, and unfortunately, some of those people, they really were in a situation that they needed help. And it just didn't seem like some of the banks were willing to help. So making that phone call, letting someone know they have 30 days to get out of the home was pretty stressful.
Yeah, the bank that really messed up quite a bit during that time was World Savings. And then World Savings got bought out by Wachovia. Now,
and Wells Fargo.
And Wells Fargo, yeah. Now, when they were Wachovia, I sold quite a few REOs for them, and they actually did a really good job in helping people because they said, look, we've lost an assload of money already, and what's it going to hurt to help out a few more people? And so they were doing cash for keys. I did the biggest cash for keys through Wachovia, $25,000.
Wow. Yes.
Yeah.
That's a big check.
It's a big check to move out in 2 weeks.
Yes.
Yeah, and then they did a good job in remodeling every single property. They put in granite countertops, new kitchen, new bathrooms, and they sold it for top market value. So it'd be nice to see a study out there that might compare how they handled properties compared to another bank. But then, of course, they were still hurting, and Wells Fargo ended up taking them over.
Exactly. And, at Bank of America, because they service so many loans, there were so many different bank institutions that we were dealing with. So it would be tough for me to say which ones were cooperative and which weren't. Because it was nonstop at that time. So it was high demand. It was very stressful. And to be honest, I remember I put my suit on and walked out. Not literally walked out, but I hit the pavement looking for new jobs just to get out of that because it was tough.
Yeah.
Yeah.
So what's your day-to-day look like today at Travis?
Well, currently, so I'm the operations manager. However, because I do have sales background as an account executive with CMG Mortgage, I was in that position for a good 5 years. So Travis Credit Union we have a lot to offer. We have some awesome programs, portfolio programs, great rates and pricing. So we're trying to get the word out. So actually they came to me because I have that background and asked me to get, hit the pavement and start hunting for relationships with agents and realtors and brokers and whatnot. So my day is pretty much managing my team of underwriters, funders, as well as processors, any questions or exceptions or whatnot that I need to go through. And then on top of that, I'm, meeting with people like you and other agents and realtors just trying to generate business. So it's a pretty busy day.
Okay. Now, Travis partnering up with agents is kind of what brought us all here together today.
Yes.
Yeah, in fact, how did you guys meet?
We actually met through a colleague who used to work for another broker, and now that colleague, Omar, he actually joined Security Pacific Real Estate. And
he just joined last week, right?
He actually joined yesterday, and today was his second day, and he got the chance to meet everybody here at the office. But that's how we pretty much met with Duane.
And I just add that Omar has been very helpful with introducing me to a ton of different clients out there. So I appreciate everything he's been doing.
Okay, great. How does Travis partner up with agents? What's the relationship look like?
Well, we used to be in a program where our leads from our 23 branches would be placed into a program where if you were a realtor and affiliated with the program, our leads would just be housed in that system, and then you had access to our leads. So now we're working on our new program, and we have a lot more control of our leads. And pretty much we're just trying to build relationships with realtors on these leads, because a lot of these clients, borrowers, walk into our branches, they apply for homes. However, they don't have any relationship with realtors, so they look to us to build that relationship. So pretty much our local branch that's right on top of this hill in Hilltop, if there's a local member, then I would look for a local realtor who knows that area to assist in finding them the home.
Okay. And my understanding is that credit unions usually offer better deals than traditional banks, which is why it's always the first stop for credit union members, correct?
I will say that credit union members are very loyal to their credit union. So they like to have everything, their checking, their savings, their credit card, their auto loan, and their home loan all in one shop. So that's the benefit of going to a credit union, and why we have a plethora of people who walk in just into our branches and apply. So yes, it is a advantage to anyone who is a member, because we offer better programs, not better programs, pretty much the same programs, but we are flexible. So we're not just black and white, we're portfolio. We do follow Fannie Mae, Freddie Mac guidelines. However, if we like the file, they're a member, they have compensating factors, we'll make exceptions on those loans that banks will not make.
Okay. Now, you just mentioned Freddie Mac, and have you heard the recent announcement where they're going to waive appraisals on certain requirements on certain loans?
Well, that's in Fannie Mae right now too. That's
Okay.
That's the property inspection waiver, and we actually offer that, and that's pretty much based on certain criteria of your loan parameters. So, and actually Fannie Mae just announced that I think it was last week that they're doing it on purchases. I just had my first purchase last week where I didn't have to get an appraisal. So Freddie Mac is following Fannie Mae's lead, and as long as you're within, I believe it's based off of reps and warrants of previous appraisals that they've received, Freddie Mac and Fannie Mae have received, so they have a good idea how the property appraised prior to, and based on the demographics, the area, whatnot, they are allowing and accepting the value without an appraisal.
Yeah, so I'd like to get your opinion on this, and of course, Ronald, chip in whenever you want to on this, because a lot of people are really upset, mainly the appraiser industry, that this is happening because it's going to put some appraisers out of work.
I never thought about that.
Yeah. And then there's also some realtors upset in that because the banks are going to be using automated valuation models, and one of the biggest complaints that the industry's always had, just like Zillow, Realtor.com, is that these automated valuation models are never accurate. Now, I've seen some that are extremely accurate, and I know day by day it's getting better and better. In fact, I just did a Ask Mark Anything series where I talk about this in my opinion. So I want to get your opinion on if you see the entire industry moving eventually toward more and more automated valuation models.
Well, I mean, I would use San Francisco for an example. So if a home came in appraised at $700,000 in San Francisco, you're most likely to believe that value based on where it's at. So I guess the condition of the property would be the only question that would be posed. So yes, I can see it based on certain areas. I'm sure, Fannie Mae, they, when you get your findings, it locates the address, it specifies, it knows exactly where that location is. So I could definitely see that if it was San Francisco or, certain parts of Oakland or here, that, they feel safe in knowing that the value is there. So I would see that automation going forward. And actually, not only are the appraisals automated, but it's pretty much called the day one certainty, and it includes income, assets, and property. So as of right now, on some files, you wouldn't have to ask the member to do one thing except for sign a disclosure. You can get your VOE, you can get your asset information online, you can get the appraisal waived, and it would just, and actually you can even do e-sign on disclosure, so the member could do the whole loan from their home. And I think that's something like what Rocket Mortgage does as well. So, but for Travis Credit Union, we have a lot of members who've been there, members for a long time. So there's going to be different age groups. So, you may have your millennials who are interested in automated. They just want to click a button, but you're always going to have that few members who want a live person. They want to see their appraisal. They want to, that face-to-face, interaction. So 100% automating, no, I don't see that, but it's always going to be an option.
Okay. Now, we've mentioned Fannie and Freddie Mac here a few times. Why don't you explain what they are?
I'm pretty sure they're government entities right now where they, pretty much securitize the loans, and if you meet their criteria, they offer to purchase the loan and house the loan for you. So you pretty much have, as long as you follow their criteria, they're going to be willing to own and service that file for you.
Yeah, and then the bank gets that money back.
Yes.
That they can then, in turn, re-lend out to someone else.
Exactly. And
that is a huge, huge critical part of our housing market that a lot of people don't understand.
Yes.
Yeah. And yeah, I think there's still government.
Yes.
They were government sponsored up until the whole financial crash.
Exactly.
And then the government took them over.
Yes.
There was news that the government wanted to, they were eventually planning to send them back into the private sector.
Yeah.
But I think there's such a big cash cow now.
Yes.
That the government's not going to give them up. And it's really the Treasury that's not going to give it up.
Not going to give them up. So, yeah, they are still government backed.
So you guys also do insurance too, correct?
We have insurance department as well. Yes, sir.
Okay. Now, Hurricane Harvey, I read a stat, 80% do not have flood insurance. I mean, how is this going to affect every homeowner, renters, and how is this going to affect even the banks that had loans on these properties?
That's a tough question. I mean, without the insurance, that's pretty much, a dead end. I mean, it's rebuild time and a loss. I mean, that's pretty much all that I can think that can come out of that. It's unfortunate, and I guess more people would have to have more charity donations to assist without the insurance. So, I mean, it's unfortunate. I just couldn't even fathom how that would, be for my family.
Yeah, and I know one of the other problems too is now, do you think many of these banks that have the loans, would they have insurance to cover their loan?
Well, if it was a Fannie, Freddie, or FHA government loan, not a portfolio loan, so like us, we portfolio loan, so we would be, it would be our loss. However, if you're paying mortgage insurance or whatnot, I'm pretty sure that possibly can be a coverage for you on a home like that, because you're not going to be able to live in that home. So that's a good question to look in to see if mortgage insurance assists with that. But I'm not positive on that as well.
Yeah, a lot of the people are mentioning. I mean, I've been seeing it all over the news, and now the government is starting to step up, and they're actually encouraging a lot of the people that have just regular home insurance, even though they didn't have flood insurance, to actually file a claim, and somehow the government is going to step in and try to help the people as well.
I mean, I would see that because the insurance company is going to lose money. I mean, that they're a business in itself. So if you're not paying for flood insurance, and then the government is trying to push those insurance companies to assist, that's the whole point of having the option to have the insurance. But I guess they weren't in a flood zone, so it wasn't required. I mean, I guess it's an option that you can always pay, but most people don't take that option.
Yeah, 80% didn't have flood insurance.
Yeah, so that means that it wasn't located in a flood zone. It didn't have it.
It's just like if you ask 10 people right now if they have earthquake insurance here in California, I guarantee you 8 out of 10 they're going to say no, I don't.
Yeah.
And the other 2 are probably going to say yes, I do. So
well, we're right next to a body of water right there that, I'm pretty sure a lot of people around here do not have flood insurance, and the same thing can happen here. Our levees go down, break down, earthquake, like you're saying.
Look at Oroville. What almost happened over there?
Underwater, so it's likely to happen here. It can happen. So I guess it's hard to state, if you're in a flood zone, whether you should, get that or not if you're not in a flood zone. So I would recommend, I guess, if you're near a body of water like that, then you might just want to get that.
Yeah. And damages can even go beyond the homeowner, the bank, and into the insurance companies, because we also saw that during the financial crash, where AIG was a perfect example of they insured every single type of loan. And every bank was filing for a claim, and they went bankrupt, and the government had to step in to bail them out.
So that I would say, like Ronald was saying, I would say that that's the only option is for the government to step in, because the insurance companies would just go underwater if they had to assist in that.
Yeah. Another thing is that lenders are catching up to that early on now, where they will not fund you until you have like a flood insurance or any type of insurance that your home will require in order to insure their loans. So
and now that's also caused a lot of other problems too, because that has also hurt certain transactions from closing, because flood insurance can get very expensive depending on where your property sits on a map, and that could prevent some people from buying a house.
Oh, absolutely.
Yes. And that's where a great agent comes in to let you know ahead of time, if you have those extra expenses like flood or mellow roofs or whatnot, that can pretty much dictate whether you get approved or not.
Yeah. So is insurance always required to make a purchase and get a loan on a property?
For homeowners insurance, yes. Now, if you're in a flood zone, you are required to get flood insurance. Yes, sir.
Okay.
Yes.
Now, how can someone determine if their property is in a flood zone?
That would be per FEMA. So your appraisal is going to pretty much let you know as well. And then on every file, we order a flood cert, and then the flood cert will specify whether you're in a flood zone or not.
And those maps change every year, correct?
Yes. So there is an expiration date. You have to look at the date and make sure that it's a more recent date. And that's why you really hope that your appraiser is also doing their due diligence as well.
Okay. Now,
you can also determine on the NHD if your property is on a flood zone, and that's where basically Duane said that's where we come in as agent to educate our clients and let them know if they're on a flood zone, and then they need to get insurance for that.
Now, the NHD, I think, is a very important document. It literally costs, I think the cheapest one I see right now is $89. It's extremely important to get as soon as you list the property, because you get that within a day or two, and then you're able to identify and you're going to know exactly what the buyer will need ahead of time before they make an offer. Because if they make an offer and then you get the property under contract, then you order it, now you find out that there's problems. Now the buyer doesn't qualify, or they want to renegotiate the price, and it's all something you could have avoided from the very beginning.
Exactly. That's part of the disclosure package, and once again, that's where we come in as agents to educate our buyers. And just for all of those that don't know, and then we're talking real estate lingo here, NHD. NHD stands for Natural Hazard Disclosure, where we basically tell our clients where the home is located and if it is in a flood insurance and many other things around that property.
Yeah. Now, why isn't it with new loans that earthquake insurance is not required here in California, especially in the Bay Area where there's fault lines like every block you walk on?
And I remember once upon a time, every Freddie Mac California loan required that, maybe 10 years ago. So I guess because we don't have them enough, and probably enough people complain that, hey, I'm paying for this insurance, and our last major earthquake was '89. So you're paying for this insurance, then, money can be tight. So I can see people just feeling like, why am I paying for something that may occur every 5 decades or whatnot?
Yeah. And I guess if there's enough political pressure, then the politicians help the banks remove that requirement.
Yes. But once upon a time, it was required on every Freddie Mac California loan.
Did they make any changes after the '89 earthquake, or was it required back then?
It was required back then. I remember every single file had to have that if you were going through Freddie Mac.
Okay.
That was California.
Interesting. And I know another constant battle, and in fact, there's some recent news out there right now, is a mortgage interest deduction. This is something, so I'm involved with the California Association of Realtors, and it's something that we're constantly battling, at the state and really at the national level, that they want to get rid of this. And how many potential homeowners it could hurt because of it, how, they're going to have to pay additional taxes, and how many homes are actually purchased because of this deduction is another interesting figure that I don't think gets enough press. So what's your take on it?
That's tough because I used to sell this program called the Home Ownership Accelerator, and the idea was to pay off your home quick. But then you have some people, I remember, somewhere, I don't want to pay off my home. I like to get my interest rate deduction every year. Every $3 you put in, you get $1 back. So it depends as an individual how you want to look at that. Do I want to give away $3 to get $1 back? However, at the end of the year, some people look forward to that. It is a write-off. I believe you can also write off one additional rental property, I think, or a second home. So that's a tough answer for me because I actually used to combat that. So
so I like this. I like where this is going because everyone's quick to say, no, you need it, right? Now, you bring up a very interesting topic here that, so if you keep the loan the way it is because you're, you like the mortgage interest deduction, over the lifetime of the loan, you're going to pay so much more than what you actually save.
Yes.
Now, I can totally understand that if you're on a budget month to month, you can't really make many more extra payments on the loan. Mm-hmm. I totally get it, and that's where you're at. Mm-hmm. But if you have the ability to pay off the loan sooner, then it actually works in your favor.
100%.
As opposed to keeping it around longer for the deduction.
That's the difference in, I guess, the generation now, and I guess our parents' generation, is their mindset was to pay off the loan, where we, I guess, continue to have that loan for the wrong reasons. Some people want that interest rate reduction, but in my eyes, I would want to pay off my home rather than continuously just having that interest rate to pay.
Now, I would be curious to look at the stats of how many people can afford to pay it off sooner than those that can't. Mm-hmm. And I would assume there's more people that cannot afford to pay it off sooner, which is why it's an important deduction that, the associations and many groups keep fighting for. Mm-hmm. But yeah, now that you say that, I could totally see the math working out on that.
Yeah.
Because if you take out and you can do the numbers here, a $200,000 loan, mm-hmm. how much do you pay over 30 years?
Double, if not, I would say. Right?
$430 easy.
Yeah.
So you're paying an extra $230,000.
An extra home.
Yeah. So you're paying an extra $230,000, where you're going to save maybe, anywhere from $1,000 to $3,000 a month, or not a month, but a year, mm-hmm. with that interest deduction.
Exactly. So the math actually, if you, so when I used to sell this program, I would come across those ones who were very savvy with their money, your financial advisors and whatnot. And for them, that interest rate reduction, some of them are, reinvest. So it also depends on how you use your money. If you're taking that money and you're investing, you're not buying, unnecessary expenses or whatnot. Then I can see it. Exactly. So I can see that, hey, taking that money and maybe, doubling or whatever, reinvesting is an option. But, a lot of individuals just wanted to pay off that home. So that program for certain individuals was, a definite seller.
So do you recommend people to do like a 15-year mortgage if they can?
100%. Even myself, I would, me personally, I would rather buy the lower valued home on a 15-year than the higher value home on a 30-year.
That much of a difference, huh?
I would. Yeah, definitely. Just because if you look in your amortization schedule, and if you did a 15-year, in 5 years, the amount of equity that you earned in that home I mean, you can buy again, then you can buy bigger. You can take that money and use it somewhere else. So the amortization schedule says everything. That's all you have to look at, and that speaks. It says everything for you.
Yeah. So one thing I try to tell people is if you can buy a place, buy a duplex, triplex, fourplex.
I'm the same way.
Yeah, the financing is literally the same as a single family residence.
Yes.
They don't. Once you get to 5 or more, you start getting into commercial lending.
Yes.
But if you can afford to buy a house, and especially if you're renting an apartment or in a small place right now, if you buy a fourplex, live in one unit,
yes,
stay there for 1 or 2 years. It pays for your expenses, save up some money, and then you can go out buy a house or buy another fourplex.
Yeah, and actually, a lot of people don't know that FHA, you can buy a 4-unit owner-occupied on FHA. So for a conventional, you're going to have to put down a little bit more, but I'm the same way. You if you can get the 4-unit and live in the one, then by all means, I would do that.
And I think another thing that you're the expert here when it comes to loans, so that you might want to touch on is how much of the income can a buyer use if it is a fourplex? I believe it's 75%. Correct me if I'm wrong.
For conventional, it's 75, and for FHA, it's 85.
Why wouldn't you take advantage of that if you're a first-time buyer and move into a fourplex or a duplex or any multi-unit,
Exactly.
real estate place? So
now, the majority of what I do, Ronald and I work together on selling homes, but the majority of what I do is property management. So I deal with a lot of renters right now, and many of them want to eventually buy a house. So right now I'm looking to try to put together some extremely affordable coaching program to where people just get the information they need to improve their credit scores and do what they need to do to eventually buy a house. So what are some tips that you can give, or something that you've seen over the years that people can use to help improve their credit score?
Number one is don't overextend yourself. So a lot of people don't understand the financial requirements and whatnot, debt to income ratio. So if you're overextending your house, you're pretty much eliminating yourself from being able to afford a higher valued home. So I would just keep your expenses to a minimum, and at the same time, pay your full payment every month. Paying the minimum, because right now there's something called trending data that Fannie Mae and other credit institutions use. So they're gonna know if you pay the minimum payment or if you pay the full payment monthly, and the one that pays the full payment monthly is the likely one to get approved.
Okay. Now, is there some correlation with the current balance of your trade lines to the limit that affects your credit score?
100%. So it all is a factor when you apply too. So the date that you apply is a big, a lot of people don't understand this too. So when you get your statement and your statement shows a full balance, you don't want to run your credit. You want to run your credit when your statement balance comes in and it's at a third of the limit. And then that's when your credit report is going to read off of that statement balance, and that's when you run your credit. So always look at your statement, look at the amount that you owe, and if your statement comes in at a higher limit, don't run your credit, because that can affect your score by 30 points.
Okay. And if you do run your credit, and let's say here's an example that I saw, which was pretty neat trick. And so there was one person who was looking to get a loan. They had 3 credit cards. Let's say they each had $1,000 balance or high limit on each credit card. Well, the first one was maxed out, and the other 2 were completely empty. By them transferring some of that debt to 2 other cards, they lowered their ratios down to a third, and all of a sudden their credit score just jumped up a few points. So just some simple tips like that, simple things that people can do to simply just boost their score. Mm-hmm. But it depends on when the credit statement comes in then.
Yes, 100%. It will depend on the statement date. Most lenders, most lending institutions are going to report what's on that statement date.
Okay. Now, here's a question I get quite a bit. If they're undocumented, how can they get a loan? Is it still possible? I know years ago they had specific loans for undocumented immigrants, but they were still limited. You know, not every bank was doing them.
Mm-hmm. Well, Fannie Mae does not have any requirements on undocumented anything. It does, you know, it's pretty much the lender's discretion. And because most of us go by Fannie Mae, I'm going to say most lenders are going under your discretion as a lender. Us at Travis Credit Union, we want to see at least an employment history, so that goes into the your work visa or whatnot, which you know is going on right now. So as long as you have your 2 years of permitted work history, and you have a social security number, not a I-10 number, then we're gonna proceed with that file.
Yeah. Now, recently, the administration announced that they want to get rid of DACA or reverse its effects. And for those that don't know, that's a Deferred Action for Childhood Arrivals. Now, Ronald, why don't you tell your story? Because I think it's a very interesting story of how you came here and how you became a realtor today.
Yeah, well, I came to the U.S. about 17 years ago, and I was undocumented for 7 years until I got married to my wife, and that's how I became a resident, and now I'm a proud American citizen. But I think that what the administration is doing is definitely going to have a huge impact on personally on my business, because most of the people that I work with are immigrants, and they're trying to realize their American dream, which is buying a house. And I work with quite a few that want to buy a house, but they only have an ITIN number. Unfortunately, for those that have the ITIN number, there are not too many lenders out there that they can approve them, because they need to have 10%, in some cases 25% for down payment, and not everybody has 10% or 25% to buy a house, especially here in the Bay Area, when the cost of buying a house is, the average would be $400,000 to $500,000.
And the majority of the DACA applicants are California and Texas. So for sure, if they get rid of it, it's going to hurt the housing industry, because here's the stat: 25% of those over 25 years of age own a home. And these are DACA applicants. And now this, just to clarify, this allows undocumented immigrants to apply for legal status, and then they have to renew it, I believe, every 2 years. Yeah. Now, 97% of them have a job or go to school. I mean, these are productive people in our society. Mm-hmm. And so getting rid of this, it's going to hurt them. It's going to hurt their ability to go to school, to get a job. Many of them were able to go to universities, get a bachelor degree afterwards. 28% have bachelor degrees. That's almost the average of the number of people that have bachelor degrees or higher degrees today, like just in general. So, yeah, I mean, it's going to hurt our housing industry if they can't have legal status to buy.
Not only the house industry, but the economy as a whole, I think. If you look at the big picture, I think the solution to the problem will be an amnesty, and they might be looking at, 10 people, but let's just be real here. I mean, out of 10 people, how many of these 10 people are going to be criminals or whatever? Probably 0.5% or 1%, and the other 9 people are going to be productive and contributing to the economy of this country. So
I would be willing to gamble that the number of criminals in that group is the exact same percentage of the number of criminals that we have here that are born and raised here legally.
Definitely, I would agree.
I'm gonna put myself as an example. I mean, even though when I was undocumented for 7 years, I mean, I remember when I first came. I mean, I had plenty of family members that came before me, and then I came to live with my oldest brother. And the first thing that my oldest brother said to me, "You're gonna start doing everything the right way, and you're gonna pay taxes because one day you're gonna become legal, and that's gonna be a benefit to you when you sit down with an immigration one day." And he was right. I mean, I've been paying taxes from day one, even when I was undocumented. And a lot of these people that are out there don't know, but once you become legal in the country, you can transfer all the taxes, all the money that you pay to Social Security. You can transfer all of your benefits to you eventually. So, yeah.
It's a huge plus. I didn't know that.
Mm-hmm. Absolutely.
Okay. Yeah, and I deal with people that don't have Social Security numbers but have tax ID numbers. Mm-hmm. We can still run credit on them, and we can still run backgrounds because if they do everything through that ITIN number,
absolutely,
they can have trade lines, credit cards. They can still get car loans, I believe, and they can still do a lot of things that legal citizens can.
You can pretty much do everything except for getting out of the country, and some employers might not hire you because they have the new system. I think is Verify.
So that's something I've had to do with some recent hires. Is they ask to verify your passport or driver license in addition to your Social Security card. Mm-hmm. I mean, it's really odd, but I totally understand why people will now avoid going the whole payroll route because of it. Yeah. Okay, so that's our time for today. I want to thank the two of you for coming out. It was, I think, some very, very good topics here and good information, good tips for people. Duane, thanks for coming out. And if someone's interested in contacting you or Travis Credit Union for financing, what's the best way to do that?
You can reach me at 707-880-1035, and I'm always available, or you can visit our website at traviscu.org.
Perfect. And we'll go ahead and link up everything on the podcast description for you.
Excellent. Thank you.
Thank you. Thank you to my guests, Ronald Garcia and Duane Vizinau, for being on today's episode. Lots of good information, and I hope you listeners got some good value out of it. Thank you to my producer, Sam Lubman, and please like, comment, share, and do not forget to subscribe. I really, really want to thank all of you for listening. It means the world to me, and I hope today's episode provides you value in your day-to-day life. I created this podcast to help showcase the many great people that live in this world and help share some knowledge that I've learned along the way in life. Again, thank you for listening. Check out our sponsors, and I'll catch you on the next episode.